Okay, hello, trader nerds, and to a couple of my students from the University of West Georgia. Hope everybody's doing well. Let's look at the market today. The S&P 500 is down 0.26%, but look, it was down much farther, and now we are recouping and headed back up. Oh, wow, look at this. VIX is at 14, so it's elevated a little bit. Remember, we sell options. When volatility of the VIX goes up, that's the fear index. It's gone up a little bit from yesterday. It was in the 13 handle. So that means that options are more expensive today, right? Options are a little more expensive. So, yeah, looks good. AD is negative 297. Volume is elevated a little bit, 5,400 contracts every 2 minutes. Let's look at the big green monster, see what we get here. Aha. So indeed, it looks like this area that we drew way back on March the 1st is an area of support. It went down, touched it, went down below it. It held as support, and now we're coming back up. How these things work, we have no idea. But where are we going? Looks like everything's normally fairly priced. So, we should head back up to the 5250 at some point. It just looks like it's in the cards. Let's look at the linear regression. Linear regression is linear regression's going up, up, up and away. You see this kind of binds it up, and you see that we are in a bullish market right at that mid band. So we continue to believe that the market's going to go up in the short term. So let's look at our little account today and talk about the 111 trade that I've been doing, the 111 and the 112 trade. But first, let's check our metrics. We've got to check our speedometer, our tachometer, and our fuel gauge, right? So let's do that. So let's see how much money we've got in the account. 184,296. So we did a couple of transfers out of this account. Tell you about that in a little bit. 184,296 is where we're at now. 184,296. So we took, let me put that in there first. 184,296. So we took out 94,000. We took out 100,000, transferred those to different accounts. And now we've got 184,296, which means we are up 3.18% on the year. Fire it up, Rico. Yeah, so we're actually up more than 3.18% because we've got less capital in there, right? So we're up probably 4, 5, 6% on the year. So that's really, really good. Really, really good. So let's see our Greeks and ratios. So let's go to the speedometer first. And there's that. Go here and make sure we're doing this. Let's see. Let me hide my account numbers so nobody steals my money. Not y'all, but somebody that might see this online or something. I trust you guys. So let's see. Which one are we at? Right here, I guess. So we have deltas of 388 and theta of 354. 388, 354. 388, 354. Let's put those in there and then tell you what it means. 388, 354. And VIX is at 14. Okay, so this is our speedometer, and we're going a little too fast, y'all. We've got a little bit of positive deltas in this account. So we kind of don't like that, in that we've got too many positive deltas. And it says that we need about 112 short deltas. Okay, so we're a little too bullish. In other words, this account is bullish to the tune of it's like having 388 shares of SPY in this account. And so we need to be a little bit less. So not necessarily that I'm going to do anything about it, but certainly we could, certainly we can put in some bearish trades if we wanted to, but I'm not going to do that today. Look at this, y'all. So now, remember, we can use up to 50% of our buying power because what we went over last class, but we're at 0.19%. That's really kind of the highest I want to be. I want to be about 0.2% of my theta. That's my fuel gauge. So I've got plenty of gas in the tank, but I don't want too much gas in the tank because too much gas in the tank means I'm taking too much risk. Now, since we've transferred about $200,000 out of the account, let's see how much buying power we're using. So it says we're using 87%, but remember, that includes the bill that we have, and we don't want to include the bill. Let me see. I want to just do this account, not all of those accounts. Yeah, here we go. So actually, we're using $149,000 worth of capital. And so we may be a little bit uh, too invested here. 149,484, 149,484, 149,484. So we're using 81% capital. So that's a little bit aggressive now. Yeah, you can probably take something off to lower my delta. Exactly, Chain. That's exactly what I can do. So really, the reason that these numbers are now elevated is because we've moved capital to another account out of this account. So now we're a little bit elevated on our capital. And our position sizing tab, now for those of you that were in Muscadine Mafia last week, we talked about changing this, and I did. So I looked at the initial buy power of a wood in this account, which is about 8,500. And then how much buying power does it take after 15 weeks it's been there is about 6,500. So I took the average of these, and this is now saying that I can put on about one contract per week, right? So right now I should have after week 15, I should have 12 positions on. Let's see how many we have on. We have 15 positions on. So I certainly can close something and not necessarily. Let's see. Jimmy wants to know, can I explain the last two columns on the Greeks tab? Yeah, let's look at those. You're talking about conservative delta and max deltas, Jimmy? All right, conservative delta, max delta. Let's see if I can remember what it is. Uh, let's see. Trying to remember max deltas. I try to use whichever one of these is more conservative, right? Um, one of them's based on 0.0015 times the thing, and the other one is based on, which is this one, and the other one is based on a different amount per area level of VIX, I think. But I don't pay too much attention to them. I normally go by whichever one's lower. So I should have 276, and I've got 388. So I need to take some of my deltas off. And as you guys said, it's probably good that we take off. Yeah, you're welcome. Take off some of these positions. So these naked positions here. So we've got some that are at 14 days here. Look at this. We got a naked put 5 that is at 14 days that we probably need to take off. We've got another one that we slid. Remember, we don't slide anymore, but we've got a 43.50 that we can take off with 14 days. So why don't we take off a couple of these that say that we need to take them off? So we'll close these naked put 5s, 38.50s. So let's go close those 38.50s. And I think I've got everything. Let's say 30 NP5. Y'all help me look for NP5. That's not it. So I need to put that one in a thing. Let's see, NP5. NP5. There it is. Here's those two 38.50s. And look at there, they're at 98% profit. It's time to take those off. So let's take those off. Close position, close those two. And we're going to try to be greedy and take them off at 30 cents. See if we can get that on there. And see if we get some Applebee's money, baby. Let's go back up to 35 cents, make it less advantageous. So this is a debit, so I'm paying some money to do that. And we're out at 35 cents. So let's put that in there and see if we got Applebee's money. So we took the 38.50s off at 35 cents. We sold those options at 14.75. Huh? So we made, well, let's put today's date. Control your colon. Control colon puts today's date in there. We made $1,432.72. How does Daddy continually do it? Isn't that great? All right, so we made a lot of money there. All right, and then that will leave the put debit spread with 14 days totally unencumbered, which is really nice. All right. We've got some loans expiring today as well, some loan puts. Let's see, we've got to go close this other one here with 14 days. So we want to do close these slide threes, and it looks like it's just one option at a 43.50. I wonder if I named it slide three. Let's go through that. Slide three, 43.50. See if we can find it. Slide three, position. Let's see. Slide. Y'all help me see if you see anything that says slide three. Don't see any slides. Naked puts, naked puts. I don't see anything there. Let's go down to this bottom. See if we got a slide. No, I don't have it anywhere. Let's see. So let's try to do it by, let's do group by symbol. Okay. And then let's see if we can group by days open, days to expiration. So we need to close, go back to my spreadsheet. We need to close one option at 43.50 with 14 days to go. A 43.50. Help me remember that. 43.50. 43.50. Where are you? 43.50. Here it is. Well, there's four of them there. So I guess we need to just close one of those. Isn't that what we did? We just did one of those. Let's see. Yeah, it says one contract, 43.50. Let's just close one of those. Come here, little feller. One at 43.50. So we'll close one of those. 4,300 loan. It looks like that may be part of a foot debit spread or something. Yeah, that's probably it. So let's close position. Let's do one. And we're going to close him at a try for $1. And that didn't fill, so we got to go up a little bit. Let's go up to $1.05. And that should take him out. Yeah, so he's gone. So let's go see if we got Applebee's money. Can't been to Applebee's lately. It's the best restaurant on the planet, in my opinion. 105. So we got control my colon for 314. So we made a whopping profit of $423.86. That's how Daddy does it. All right, so we've taken those off. Let's see if we can. What else is our naked positions here? We got 47 there, 14 here, 14 there, naked put with 36. I don't know. Let's check and see what this did to our deltas, y'all. Let's see what this did to our deltas and our thetas. So now we've got 379, 317. Let's go put those in. 379, 379, 317. Okay, good, 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 good. And our buying power should have gone down as well. So we went from 149 to, let's see what else we can do here. 149 to, let me find my positions. Close that, close that, close that. So now we're at 149, 484. That's the same thing. It didn't update, did it? Let's see. It should have. Let me do this. Let's see. Let's go. Where do you do the thing at?
Click that, Bobby.
And then do this little thing here?
No, switch your accounts on the far left.
Yeah.
Yeah, just flip from one account to the other.
Oh, okay. Gotcha.
Yeah, that should do it.
Okay. 147, 216. So this part is 134, 384. Thanks, Ed. 134, 384.
Thank you.
There we go. So now we're down to 72%. I probably, though, should lighten the load a little bit. Let's go close one more just to get one of these things off. Let's see. 14, 14, 36, 36, 36. Yeah,
Bobby, what are those other 43.50s? The three that you have left, where are they in your
they're part of a put debit
campaign here?
spread, I think. Let's see. Yeah, here they are. Here's some of them here, Ed. Look.
Oh, okay.
Well, those are long. So these are the shorts here. These three here, 43.50s are part of a put debit spread.
All right, so that's not hurting you.
Yeah, that's not hurting me. It's just it's defined. So let's go to this 36 one and let's just take off these four 3850s. So this is NP6 and let's just take those off. We know they're profitable. NP6. So let's find those. Let's go by custom again. Custom NP6. God, I love this stuff. Don't y'all love this? Yeah, isn't this fun?
Of course.
3850. Look at this. 3850. Let's get some Applebee's money. Ed does not have an Applebee's near his house anymore like he used to. So let's do.
No, but I ate at Longhorn last night.
Oh, that's a really good. I like Flo's filet. That's my favorite, the
That's
nine
what I
ounce.
had.
That's a good
That's what
one.
I had. That
I
thing's
mean,
delicious.
you can tell Ed's got money if he's eating the Flo's filet and he's just not doing a regular ribeye. That's good, Ed. Look at you. Oh, Ed. All right, so let's go up to $1.40. All right, we are out, baby. So let's take those off. So we took these off for a dollar. What was it? $1.40 activity, $1.40. Just taking some trades off. $1.40. Just reducing risk, y'all. That's all we're doing. So here we made, I'd say we've had a successful day, y'all. Look at this. We made $2,605 plus $1,400 plus what else did we make? We made some down here, $423,000. That's really good. So that's a 4,200, $4,400 day. That's really good, y'all. And we're just taking risk off. So now let's go over here and let's go to the thing that Ed told me to do a while ago. Let's see, where do we do this, Ed? We went to count requirement under positions. Let's now see
Yep.
what our stuff is here. And you said switch to any other. All right. So now we are at, let's see, 368, 288, 368, 288, 368. See how we're just making the incremental improvements? 368, 288, reducing deltas, reducing our theta, and then our buying power has gone down to, let's see, to 126.7, 126.7. There you go, 126.7. All right, beautiful. Beautiful, beautiful, beautiful. So I really don't need to put on a trade this week. We're just taking a little risk off. We're a little heavy here, so we're just going to calm down just a little bit. The other thing that we could do is we could put another hedge on, but I don't think we're going to do that. I think we're just going to leave it right where it's at. So here's the takeaway from today's session, y'all. You come in, you put your Greeks on, and you go, oh crap. Now the question you got to ask yourself: am I comfortable with this risk? Am I comfortable being at 68% buying power and 368 in deltas when it says clearly that I need negative deltas? And my answer is, yeah, I think I'm good. I'm comfortable with that risk. Um, I was not comfortable when we first came in and had those initial numbers that were on there. And therefore, I went in and took off some positions, which reduced my buying power, reduced my theta, and reduced my deltas. Because the problem is, and let's show it. And is Brian here today? Ed, is he in here today? Let's show his little thing that he likes
I
to
don't know
do.
if he is.
This used to be Evan's game, and now it's Brian's that shows the little cap requirement thing here. But
Mhm.
let's see how we do this. We took on ES here, and then we go on risk analysis. And then we say, hey, what if the market goes down 20%? Well, we're going to be down $211,000. Well, y'all, there's a problem. And that's if IV doesn't go up. So if you were to say that IV went from what it is now, 14 to that would be what, 40 or 30, 35, 40, then you're down $484,000 on a 20% move to the downside. And this is what do we say, 180 something thousand dollar account. So ta-da, you've blown out your account. So that's never good. So let's see, 25 plus 15 is 40, right? That would be it going up to 40. So we just got to make sure that we are, and maybe it is. What would you do, Ed? Would you put in a hedge, another hedge? Would
Well,
you buy a
so
14-day put? What would
yeah,
you do?
I heard you say that you have some expiring today.
Yeah, I've got some loans expiring today.
You do. So you're when they expire tomorrow, you're going to wake up and your buying power usage is going to be higher again.
Yep. Mm-hmm.
So I don't know if you want to do it today or tomorrow. I don't know what your normal hedge day is, or if you even have a normal hedge day.
Yeah, I don't have a normal hedge day.
Okay, all right. Um, and I don't know how many longs you got, but whatever you have expiring today is going to, you know, raise your BP usage tomorrow. But today or tomorrow, either way.
Yeah.
And Bobby, I had one more question on your
Mm-hmm.
spreadsheet on the net lick page.
Yeah.
Um, on your deltas, your max and your conservative deltas.
Mm-hmm. No, we'll go over here. Uh-huh.
Yes, scoot over there for a second. I don't know if I saw that right or not. Okay, so it looks like your max deltas are lower than your conservative deltas. I feel like the formulas are mixed up there.
Yeah, normally I'm trying to figure out how I did this. Let's see. And let's see,
You know,
do
because
I
the higher delta is a more aggressive number, the lower delta is a more conservative one, but it looks like your numbers are flipped somehow. I don't know.
so it looks
It might
like on
just be
the
something to, yeah, it might be something to check like after hours, but those
yeah.
numbers don't look like the conservative looks like the aggressive and the max looks like the conservative, if that
Mm-hmm.
makes sense.
So it looks like on conservative delta, what I did is I said it's 0.0015 times whatever the L19 is my net lick is. Um if M19 is above 30, it's M.15. Okay, so it looks like on this one, Ed, regardless of what your VIX is, it looks like I use
Mm-hmm.
0.0015 in all of the calculations. So in other words, this is just a constant number. It's a constant delta of making sure you're not over 0.0015 times your
Okay.
net lick. The max deltas is looks like this one is based on the volatility. So if it's
Okay.
under,
So
if yeah, if
because
volatility
VIX is
is
low,
yeah,
so
because
because
VIX is
VIX is
low.
low, it's telling you to go lower
Yeah,
on your
see, VIX is
deltas.
low, so it's saying, it's using an even more constrictive number. I probably should
Okay.
rename these. Yeah, this is probably
Yeah,
VIX
VIX adjusted
VIX
deltas.
adjusted deltas, and this one is just a constant deltas. So I think let's do that. Let's do VIX adjusted deltas. Let's do that. VIX. Um, well, if I just say VIX deltas, max deltas, I think everybody will know what that means. It's based on what the VIX tells me. And this is, what should I call this, Ed? Non-VIX delta? Or
Well,
just,
yeah, I don't know. It's it's not conservative deltas. It's I don't know. You could maybe just call it delta. Okay, there you go.
yeah, fixed. And then VIX, this is based on VIX. This is based on a constant of being 0.0015. And I think either of those will be fine.
And then my
Uh,
only other thought was like on your hedges that I'm sure you have your bombshell hedge running in here.
yeah, we do.
Maybe you don't need as much bombshell hedge since you moved all this money out, and you could take some of that off and lower your metrics more. Is that possible?
Yeah, it's possible. Absolutely. I like that I've got them going now. And look, the cool thing is, Ed, we've also built a little thing. Look, um, the
Mm-hmm.
total cost of my hedges is
Oh, nice.
it's only cost me $415 so far for all these hedges. And I've got 84 short positions of the Black Swan hedge, and I've got 123 long hedges.
Wow,
Isn't that cool?
that is.
So I'm building this thing up, and like you say, it's probably bigger than it should be for this account. The only thing is, I've just got a few more positions here than I need to have on. Um, you know, and maybe, maybe as I'm looking at this, maybe I should take some more off. And I said that here under the position sizing that we should have a total of 12 positions on. And we go back over here and we've got 12 naked positions on. So that's probably okay. I might could pare that down a little bit, just take off a little bit. Let's see what else we could take off just to make this a little bit, because you don't want to blow out an account, y'all. I mean, that's the thing you don't want to do. So let's see. We've got this put debit spread's coming off for a day. So we've got put DS naked put sevens for 36 days. You can certainly close those. Naked put sevens at 39.50s. Let's look at those. Naked put sevens. So let's go positions. Naked put sevens.
I think this is good, Bobby, because you wouldn't let your metrics creep that high.
No.
They're only that high because the cash has come out. So
Right. So this is good. This is a great exercise. And for my University of West Georgia people, this is great that you're seeing this because um, we're just talking risk and making sure that we're taking risk off. So there, let's see, naked put seven. Where are you? Naked put seven. Oh, there was the slide three. Yeah, so we got rid of that. I did have second. Naked put eight, nine, PDS there. Where are you, seven? Let's see, naked put seven. Here's what we could do. We can find him. He's probably in with somebody else. Let's make sure it's not these. No, it's 36 days. Let's see. Naked put sevens. We got two 39.50s with 36 days. 39.50 with 36 days. I remember that. So let's take this off by symbol. And then let's do it by DTE. 39.50s with 36 days. Here it is. 36 days to go. They're at 90% profit, and there's two of them at 39.50. Let's close those. Try $1.60. Nothing. Dang it. I'll go up to $1.65. Got to make it less advantageous. This is a debit, so you got to pay more to get out of it. $1.65, we're out. So let's go put that in. Naked put seven, $1.65. And y'all, there's nothing wrong with ringing the register. Control colon. So on that one, we made, look at there, $1,452.72. That's great. Isn't that great? And Ed, what I'm doing by taking all these off is I'm leaving all these put debit spreads on there that's really going to help too.
yeah,
Let's
you
see.
got it well protected. It looks like. Just
Yeah.
I
Let's see
think the
what
risk
this
was a
did.
tiny bit high due to the cash drop.
Yeah, I think you're right. I think you're right. Let's go to this again and let's make
It's
our
one of those old high class problems creeping up.
high class problem. And Ed showed me how to do this. So let's go back to 72. Okay. And just make sure everything's looking good here. So now we're at 362, 270, 362. See how we're keeping going these up? 362, 270. And now we've taken this down to 126,000. Let's see, 126,000. And now we're at 121.5. Yeah, I think I need to take it all the way down to 50%.
I, I wouldn't argue with that.
I mean, I just think I need to, y'all. I mean,
I wouldn't argue with that, especially knowing you're going to lose some hedge power overnight as well.
yeah, because we've got those five loans that are coming off. So let's go back to
Mm-hmm.
the trade tab. Let's take something else off. Let's take
And I like how
uh
you're just slowly peeling it off,
yeah,
Bobby. Like
yeah.
peel it off, look, peel it off, look, peel. I mean, that's the way to do it.
Let's take off these two 3900s with 36 days to go. Let's put those 3900s with 36 days to go. So let's see positions. Here we go. Two 3900s. Here we go. With 36 days to go. Look at there. They're 91% profit. Why be a pig, y'all? Hey, tell my West Georgia students uh, what the about the pigs and the bulls and the bears. Bears make money.
Yeah,
You remember
bulls
this?
make money, bears make money, and pigs get slaughtered.
Pigs get slaughtered, y'all. No need in being a pig. Be a bull or a bear, but don't be a pig. So we're taking these out at
Yeah, and those
one.
90 percenters are very close to your target.
Yeah.
You're overdoing it on the risk side. So it's almost screaming at you to take it off. I think it's a great move.
Yeah, I think so too. I like this. Plus, look at all the Applebee's money we're making, Ed. I
My God,
mean,
you could take the whole family out for 2 months on today's action.
my God. Yeah. I mean, this is great. Look at this. Nothing wrong with ringing the registry, y'all. Look at there. There's another $1,500 in profit. All right, let's take another one off because we're still not 50% yet. God, this is great, y'all. Listen, my West Georgia people, you're probably sitting there going, what is he doing? But I'm telling you, if you get this, you're going to be able to stay in business and you're going to be able to manage portfolios. This is portfolio management, y'all. This is what you do. You got to make these decisions. So we got these at 47 days, the 3950s. So let's go to the 3950s at 47 days. Positions. 3950s. Let's find those. 3950s at 47 days. There they are. They're 84% profit. I mean, good Lord, people. How much profit is enough for a man? Let's try those at 235. All right, out at 235, I think. Yep, 235. So let's put that in. 2.35. And then we need to tally the money that we've made just today, which I think is going to be very fun. Control my colon. So there is another $1,282. Let's see what our buying power's down to because we're trying to get him down to about 50%, which is where we need to be. So let's go to positions. Let's go buy symbol. Okay, so now we're down to 121. I think that stayed the same. Let's go do what Ed said to do this, change it so it'll make it. There we go. And then back to 72. Yeah, 111, 6 to 18. Let's put that in. 111, 618. Remember, guys, from West Georgia, this is the amount of collateral that they're forcing me to put up in order to make these trades. So now we're down to this amount. This may be my best trading day ever, y'all. I'm glad y'all got to be here. So let's see. Now we've got, let's go over here. Let's pump it down about 10 more percent. Naked put 10. Oh, this is 4 of them, y'all. This is really going to help. Look at this. So we've got,
Hey, Bobby,
hey, Hal.
I thought your best trading day was when you're getting your toe cut off.
God, that was my best. That was up 208%. Thank you so much. Hey, listen, we got to cut your toe off. Listen, Doc, I appreciate it, but give me a second. I got to get out of positions. We were at 208% that day. That was my greatest trading day. But this may be a very close one. This is really good, y'all. So let's take off the naked put 10. 3950s was 64 days. Let's see what these are up here. No, that's naked put 11. Well, there's 47 days. I need to take those off too. But let's take the naked put 10s off first. They're 3950s at 64 days. 3950s at 64 days. 3950. Where are you, little 3950? At 64 days. There you are. At 64 days, there's 72% profit. I mean, Tasty Mechanics are take things off at 50% profit, so I shouldn't feel bad about this. So let's go 395. Probably won't get filled. That's fine. Work your orders, people. You got nothing but time. It doesn't cost you to walk him up and just try. So we are out at 4. So let's put that in there. Yeah, I don't know. I'm sitting there thinking my West Georgia students, I hope they get what we're doing. I really do. It's kind of hard to know if they do or not, but it's really this is great, y'all. This is really good. So we just made $2,085. We're going to go close these up here. Naked puts 11. So these are 3,900 with 47 days to go. 3,900 with 47 days to go. Positions, 3,900s with 47 days to go. Close those. We're going to try it at, well, let's try it at 220. All right, we're out at 220. 220. I can't wait to do the tally on what we're doing today. This is so fun. I could take the entire West Georgia class to Applebee's just based on what it is. So there's $1,272 today. Let's see what our buying power's at now, y'all. Let's go back here. And Ed said to go here, and he said to go here, and he said to go change this. Okay, so now we're at 95. Oh, wow. Look at this, y'all. Now we're at 95,187. This is beautiful. 95,187. Okay, we're going to do one more, and then we'll be right where we need to be. This is, oh, God, this is great, y'all. All right, so let's do one more. I'm having much fun. I may just close everything. I'm having so much good time. All right, let's see what else. Let's close with another one. All right, so we got PDS, naked put 12. This ought to get us where we need to be, y'all. Naked put 12, 3,900s at 64 days. 3,900s at 64 days. 3,900s at 64 days. 3,900 at 64 days. There she is. Close those. All right, we'll go down to 370. Probably won't fill, we know it, but we will nickel them up. 375. And we are out at 375. 375. And exit today, control my colon. And on that one, we made $1,067. Not bad. All right. So now let's do our Greeks and ratios and see where we're at now. We were at 362. Now we're at 294, 169. Wow. 294, 169. 294, 169. And our buying power was at 95, 187. And now our buying power is at, got to do that little thing again, Ed said. Now we're at 89,576. 89,576. Look at there, y'all. That's where we want to be, 50%. Remember, I can do 50%, and I'm at 48.6. That is gorgeous. Gorgeous. So let's see how much money we made today, which I think is going to be really, really good. Okay. So y'all help me do this. We did 1272.72 plus 1432.72 plus 2605.44 plus 1452.72 plus 1587.72 plus, this ain't bad for part-time work. And we got to start on that 1282 there. Plus 1282.72 plus 2085.44 plus 1067.72 plus 423.86 plus $13,211 just in the time that we've been together. That is great. All right. Check the analyze tab again after all this. Yeah, let's do that. That's a good idea. So we made $13,000 today, y'all. That'll buy you a lot of Applebee's. All right. And the account's doing great overall. Look at this. We have made, let's see how much money we've made on this account year to date. $16,360. It's the only thing is a lot of this now is realized profits year to date, right? It's done really, really well. So let's look at the Analyze tab now. I forget what it was before, but let's see. Account requirement. Let's make sure it's got everything on there and it's all done. In the risk analysis. Okay, that's much better than what we were, right? 323,000 now on a $198,000 account if it goes up. I'm more comfortable with that, Ed. Number one, we're not going 20%.
That's a lot tamer.
Yeah, it's a lot tamer. I can handle this. I can dig my way out of this. It's much better. All right, guys, that was a great session today. I hope you enjoyed it. One of the greatest trading days ever that we've had here together, $13,000 in profit. Hope you enjoyed it. I will see y'all tomorrow.